let's dig into those jobs numbers that the president was particularly proud of. And, it is a positive upswing. This is coming out of the Labor Department. 2.5 million jobs in May added. And businesses are, of course, beginning to reopen. So we want to bring in Francis Stacy, who always guides us through this. Francis, you're the Director of Portfolio Strategy, Optimal Capital, and you're going to break all of this down. So the president was super proud of the jobs numbers, and certainly there are more people working than there were last month, which is great. Can we sort of dissect what that looks like? Who's working, who's not, what sectors seem to be rebounding?
Yeah, so this number was pretty amazing, and I don't think anybody suspected that it was going to be this great. You went from losing millions and millions and millions of jobs last month to gaining millions of jobs this month. I will note that many of the jobs that have been regained were people that were previously laid off or previously just sort of postponed and did still actually have their jobs. So what will be important going forward is to see if people who truly lost their jobs have jobs to return to, and that will, be dependent upon the acceleration of the opening. I think it's very interesting to note that 225,000 of manufacturing jobs were added. I think that that's very great. One of the weaker parts of the economy coming into COVID was the Purchasing Managers Index, which is how we sort of look at manufacturing. And that was down. That was indicating a recession before COVID. So the fact that that sector is being propped up, I think, is very promising. Obviously, you still have some sectors that are kind of extending their losses. You have transportation and utilities, warehousing, that kind of thing. And I think that that's mainly because there's still a demand crunch. So we want to see those sectors kind of come back in along with these other sectors that are doing well. Healthcare and education had some ads as well. So it's just kind of interesting to see which of these sectors are lighting up initially. Very importantly, the Flexibility Act, I think, is super important because the biggest headwind to this recovery was the fact that those PPP loans were running, the restrictions and the 8-week periods were running out, signaling that maybe companies would let people go after that period expired. So extending that period, extending the flexibility of what the money could be used for, about 30% of those PPPs were set to run out on June 14th. So that's kind of in the nick of time. Other headwinds to come, of course, are it doesn't look like we've had a major spike in infections. So it looks like for the time being, barring a second wave, that the COVID scene is getting much better. So this does look very promising. However, the stock market, I think, at this point has gotten well ahead of itself.
Yeah, that is interesting, Francis. Something else that I find interesting in looking at the numbers, and I want you to talk about, one is the fact that African-American unemployment went up just a slight bit, but still it's up, and so is Asian American unemployment. And then about 2/3 of the reported job gains came from the restaurant industry and dentists. And I wonder, what's behind that? I mean, it could be, I sort of feel like this report has a something that's perhaps baked into it that we, meaning you in the business, have perhaps not seen in recent years because of this pandemic and because of the fact that it's just so new and different for all of us.
Yes, I agree with you. I think what's very unique is you do have these industries that are being singled out. I mean, personally, I did miss my teeth cleaning. I'm sure people are racing back to the dentist. So that's sort of an unexpected consequence. But that's the thing, is we've never really had this kind of a pandemic during this kind of a modern economy before. So restaurants, I think it's great news. That was one of the sectors that we were predicting was going to get hit the hardest. I mean, there were estimates at one point that said 40% of New York restaurants would never open again, which were very dire. I'm glad that this is coming back because you and I and Anne-Marie, we've talked about these psychological effects. And I think sort of an interesting thing and if there is ever a silver lining to the recent upheaval, is that people did gather with this common purpose. And if we do not see a meaningful uptick in virus counts, then people, I think, psychologically will be less afraid given that data. So I think that's very interesting. As far as the unemployment, with African Americans and Asian Americans, it just remains to be seen which sectors hit the hardest. Obviously, we have a tremendous wealth gap. We had that coming into this crisis. And a lot of the stimulus, particularly from the Fed's end, as they've admitted that they do not give grants, they only give loans, really does go into, asset prices and loans to companies. And we do hope that this has a meaningful trickle down effect. This is going to be a big election topic because that is kind of, one of the Republican mantras is having this trickle down effect. So we'll see how effective that is. I mean, to be fair, it was quite effective coming out of the global financial crisis with the quantitative easing creating the growth that it did.
One of my kind of like concerns when I look at numbers like this, aside from the fact that I know nothing really about the economy, is just when I look sort of on the ground level, right? At my own neighborhood, the restaurants that have reopened, restaurant owners that have received the paycheck protection money. I'm looking at like a month of being completely closed, another month and a half of only doing curbside pickup, and now, celebrating perhaps in a couple of weeks allowing outdoor seating. I keep thinking that's not how restaurants turn a profit. They turn a profit by packing the business and having a couple of turnovers on tables a night. So when I look at these numbers, I'm like, is this an indication of a long-term trend towards, what we were living before? Or is it, or are we really a long, long way off?
Well, it's interesting. So from the economist perspective, which we got quite a beating from Trump for giving estimates. But the thing is that from the economist perspective, you have to try and project things so far into the future. And unfortunately, what occurs is you have the sort of better than expected phenomena, which is what we're seeing actually this morning. I mean, the market's rallying like crazy on a 13.3% unemployment rate, which is just, historically significant per the global financial crisis, doesn't quite take out the Great Depression. But that's an extraordinary thing to have these markets. So what you're having is a reaction to estimates. So even though you're absolutely right, these numbers, these restaurants are not returning to any kind of normalcy quite yet. If more are opening than are expected, if it looks better than expected, if they're opening sooner than expected, and so, economists are going to start to price that in. Will it see a continuation in these unemployment numbers? That remains to be seen. Those are always lagging economic projections. Unemployment numbers are the slowest to change. We also, see a little bit of pressure on the wages actually went down from April to May, which is interesting. We talked about this before on the show where we said, they might be increasing wages a little bit just because less people want to work. So you have less supply, you've got more demand for employees for the essential services that remained open. We've seen a little bit of a back off in those wages, and that's where the trickle down effect really had a very latent effect from the global financial crisis. Stock markets went soaring, but we did not see an uptick in wages until very, very late in that cycle. The other thing that President Trump noted that I think was very interesting is that we had the strongest economy in the world before this virus started. I think what's interesting about that is if you're looking at the stock market, that's certainly true. But if you're looking at earnings, and if you're looking at things that substantiate the fundamentals in the stock market, earnings had been decelerating. Manufacturing numbers had been decelerating. CapEx spending had been decelerating pretty much since the third quarter of 2018. So the economy was actually slowly getting weaker before this happened. If you calculate that into the rebound, we may have had a bit of a worse pandemic. And so then the numbers off of the lows are going to be, could bounce back even faster, if that makes any sense. So those numbers could be quite historical.
Yeah, that does make sense, and it's really fascinating stuff. Frances, Stacy, we love talking to you. Thank you so much.
I love being on with you. Have a great weekend.